Hi, everyone. I'm Mike Gassewitz, CEO of TriCert Financial Group. Welcome to another episode of InFocus. Today, we're going to talk about our energy sector. And joining me is Grayson Waechter, our portfolio manager responsible for this sector. Welcome, Grayson.
Thanks, Mike. Always a pleasure.
Great to have you on. So, obviously, we've been talking about the U.S. election. Maybe we'll come back to that a little bit in terms of Trump's win, but let's focus in on the energy sector, maybe specifically oil and gas, and talk about, from a business perspective, how is that sector faring?
Yeah, absolutely. So the oil and gas sector is something that we like to play. We typically hold international exposure in our clients' portfolios. And we do that typically through three companies, Shell, Exxon, and Chevron. And the key with all three is they're really big, they're large, and they're geographically diversified, basically across the world. And the reason we like this is when you compare it to maybe just our home country where you're looking at Canada, we've got a lot of restrictions on our ability to be able to, move oil out of the country, especially with pipelines. And when you look at the international guys, they have the flexibility to really go wherever they find the deals are. So Exxon's been in the States, but they're also in Guyana doing some offshore pipeline, big oil rigs. You get the same thing with Chevron as well. They're very much diversified across the globe. So anytime you get a government that maybe be a little bit more restrictive, with an energy policy, they have the ability to flex and move their projects abroad to still bring in some value. So, how they've been doing, essentially, and this is, I think, the first time we've brought them up on the podcast. Price of oil is down about year over year, about 13-15%. So their earnings are down as well. But when we look at their underlying cash flows of these companies, essentially this year we've had oil it's about $68 now, but it's been as high as above 80. Those are really healthy margins for those companies. So when we're looking at their earnings, for the year, they've been quite well. And we're really comfortable holding them, when we get that oil price above about $55. When it goes below 55, it starts really compressing their margins. We had seen that before, in 2015, a little bit again during COVID. But since then, we've had pretty good oil prices. They have really healthy balance sheets. And the key to what they're all looking to do is really go out there and grow, either through acquisitions, which we've actually seen with Exxon and Chevron, buying a little bit more into the Permian Basin in the States, or also expansion projects as well. And we've seen definitely them investing in some of these more big oil rigs, especially around Africa, which was a little bit surprising, but that's just them going to where they see the opportunities.
Makes a lot of sense, staying on the international front so you can avoid, from country to country, you got, political swaying one way or the other and challenges and the like. So staying with bigger players that are globally focused sure makes a lot of sense from my perspective. You mentioned pipelines. Maybe you want to talk a bit about that?
Yeah, absolutely. So when we think of pipelines, a lot of people just think of the oil pipelines. I know, Keystone's been in the news a lot. Trans Mountain's been in the news a lot as well, with the government ownership on that, to get it built. But some of the more, exciting pipeline opportunities out there, are definitely the Coastal GasLink pipeline, which is in the process of getting built. It's basically settled to go online in about 2028. And why this is really important to Canada is because when you look at natural gas. So this isn't a typical oil pipeline. They're pulling natural gas through this pipeline. The natural gas prices in Canada, they fluctuate between about $1 to $3, for your BTU. And if we're able to start taking that, liquefy it and ship it over to the European and Asian markets, they're starting to get anywhere from, Japan's importing anywhere from $10 to $15, for the same unit. So it's a really great opportunity, that we're going to have exposure to, where we can take Canadian natural gas and move it out to these Asian countries. It's good for the environment. They're able to displace some of their coal fire power plants and convert them over to natural gas as long as they have a supply. So for our client exposure, the company building that coastal gas pipeline, that's TC Energy. It's one of the pipelines that we do hold. So they're going to make money just taking natural gas from Alberta and moving it over to the West Coast. And then from there, there's 2 projects that are designed to liquefy it and have it so that it can be shipped over to these Asian countries. The first one is, it's called Cedar LNG. It's owned by Pembina. They own 50% stake in it. Well, they own 49.9% stake in it. The other 51.1 is owned by an indigenous group. And they're able to essentially liquefy that gas and move that over. That's supposed to come online about 2028. So far, everything's been coming under budget, and we don't really see any reason for that delayed. And the second one is a much bigger facility. It's called LNG Canada. And I always find that funny because it's not owned by any Canadians. But Shell has a 40% interest in that project as well. So they're going to have a great avenue to be able to take natural gas and move it over into the Asian markets. Right. And then overall, we have the capacity to move about 10 to 12% of our total natural gas produced per year over. So just having that be exported out of Canada, it should raise natural gas prices as well in the country. So for us, we kind of see it as a win-win as long as we don't look at our heating bills.
Exactly. As an investor, you like the price going up, but as a consumer, not so much. But we're looking at it from the investment perspective, so all good. You mentioned Europe, and I am very curious about this because I remember, everyone recalls Russia invading Ukraine, the problems, and especially in Germany in terms of getting access to energy, and the infamous, our prime minister said, well, the business case isn't there. Any comments and thoughts on that in terms of how can we you talked a lot about for sure getting LNG to the Asian markets, but back to the European markets, even with those terminals coming online, will those be able to reach the European markets, or do we need some facilities on the East Coast?
So it'll primarily go towards Asian markets. There are currently facilities on the East Coast that can take that liquid natural gas and move it into Europe. It also comes from Africa that way up into Europe too. The interesting thing about the U.S. is almost all of their LNG export terminals are on the East Coast. They have next to nothing on the West Coast. So it's really just Canada up here with the ones that we're building. And then we've got Mexico as well. And it just seems like a market that the U.S. just really hasn't developed being able to take it and move it from the West over into Asia. So what we're hoping is as we're starting to export more from the West, it'll start displacing some of the natural gas that's coming in from the East, and then hopefully that can find its way to European markets too. Okay. Because the price of natural gas is exorbitant. We might complain about how much we pay here in Canada, but in Europe it's 3-4 times.
Right. The amount. Okay. Good to know. So in terms of then the markets, with oil prices and as they are today, how did the markets react in the last quarter?
So we have seen the price of oil go down. And that's mainly for a couple of reasons. We have some comments from OPEC about wanting to lower the price to be able to maintain their market share. We also have a few things coming out of Libya. So they had about 500,000 barrels disrupted for most of this year. I'm not going to go too much detail into it. The Army got involved, but it looks like there's a plan for those to start coming online the next quarter and then early in 2025. So when we look at the expectation of where these oil prices are going to go, it's pretty much been the way it's been for the last about 3 or 4 years. So the market's in what we call backwardation, which is a really, really nerdy way of just saying if you want to lock in your price of energy, oil, a year from now, you can lock it in at a cheaper price than you can buy it today. So it's about oil trading for December of 2025. It's about $3 cheaper than today. So the markets are expecting oil prices to come down, but they've been doing that ever since oil was trading in the $90 a barrel range. And really, when we're getting a price that's mid-60s to above, it's a really healthy margin for these oil companies to still be able to reinvest in new projects, buy back some of their shares, distribute more money to shareholders. It's not till, you get below that $55 mark where people really have to start tightening their belts a little bit.
Right.
And it's that mark, that we're a little bit, it's the reason why we're not more in Canada, is if we do start getting into that $50 range oil, it starts beating up the Canadian producers' balance sheets a little bit more as well. So we find that the international oil guys, they just have a lower cost that they can make more money at lower prices, and still be able to invest in their companies.
So then in terms of their share prices, have they been, tracking the oil price trend, or how have they been doing on the stock exchanges?
So on the stock exchanges, the share prices, they're up for the year about, anywhere from 10 to 30%. And that's for the oil producers themselves. And the reason is people are expecting or pricing in lower oil than has actually occurred. So when we see them pricing that in, we're still getting really, really healthy margins. They're able to expand their dividend. They're able to buy back more shares. They're able to go out and purchase and announce new projects, and that's been supporting the price a fair amount. If we look at the pipelines are up about 30 to 45%, and that has a little bit more to do with interest rates being cut. So They have a really healthy dividend yield. When you could get 5% for a 5-year bond ladder, people were kind of looking at that as interest rates start going down. People who want yield with their investments, they start looking to more, traditional utilities, pipelines, things like that can provide them with that income need. And it really drives a good amount of, demand to have investments that can provide a relatively safe, stream of dividends coming in.
Okay. Good to hear. So looking forward, and you've touched a lot about this already, but let's bring up Trump now in terms of looking forward. New president stepping into office. Already we're seeing all the appointments being made and the like. Any thoughts as to a Trump presidency and what that may do to the oil and gas sector?
Yeah. So Trump will, set policy at the federal level. You'll still have states where all these projects are going through. The term he's used is drill, baby, drill. And that definitely shows that the federal government is going to be supporting, these oil projects and expanding out these oil projects. So you're going to see less resistance at the federal level. And then at the state level, it's really going to be done by a state by state basis. So if you think of things like, Keystone, the federal government can be very, very supportive of it. But if the states start blocking it at a state level, there's a lot of political risk in something like that versus, federal level is going to deal with things like taxation. It's going to deal with, credits, the U.S. investing things, what they're going to do with the strategic reserve, a whole lot of things that they can do to be supportive to the oil and gas industry, as well. So it's really hard to pinpoint one thing, but it's going to be fascinating to see what's happened. I would say all in all, the stocks of that reacted positively to that.
Yeah, it's interesting. You brought up Keystone, and we were talking before the show. Yeah, will that suddenly, start coming back to life or not? That'll be interesting to watch. Grayson, great insight. Thank you so much for this.
Always a pleasure.
Folks, as always, if you have any questions, don't hesitate to reach out to your CPA firm, financial advisor. Don't hesitate to bring any issues up with your TriCert Investment Counsel portfolio manager, and don't hesitate to reach out to myself. Take care.